All right, good evening, guys. Counter Tortoise Capital Nightly Strategy Podcast for December 27th, 2023. We'll start with the hybrid swing 30-minute charts, beginning with Alcoa. Support, PSAR flip, standard risk, R. After the rollover, take the exit at the skin of the dragon. And again, the central idea is that when this breaks north of the dragon boundary represents sort of the boundary against the return to the mean. This is the Bollinger Band mean. And so all of this region is dedicated outperformance. And as long as that RL10 is going up, that's good. And so what the idea behind that dragon stop is that the upper skin of the dragon protects you against the reversion to the mean trade. Now you could argue, is it the upper skin of the dragon? Is it the spine? Is it the lower skin of the dragon? Should you be paying attention to the VWAP? Instead, I just like the upper skin of the dragon just feels correct to me. So I like this. I like that exit right there on this kind of a move. And it gives us 2 units of reward on what is essentially a routine trade that just barely got above the previous RL10 and started rolling over. So that feels like a good capture to me. We didn't let it get back below this what was once resistance, and it broke out a little bit. At least we kept that. So I like the 2R. AI. This is an emerging dragon. Dragon exit. Half an hour. Amazon. This one was a surprising move. This thing took off, so it broke above the PSAR flip. It's above the Bollinger Band mean. It's got kind of a Kata 2 feel to it. And then that thing just took right off from 153.75 to 154.75, and then started failing. And then the next bar opened and then started to fail after making a slight run up, and it couldn't. So that felt like it ran all the way up, and we kept half against a slightly larger risk. So this is about a 0.7 gain. I'll take that in the first hour. There was probably another move in here, but I don't like the immediate stop and reverse. I'd rather get what's available on the first blush, if I can say it that way. This was a kind of a grinding Kata 2 in Caterpillar, but there was just nothing for a scratch. This is Cliff with a big gap up and then sell off and then capture an R after a excursion all the way down to the Bollinger Band mean and then a reversal. That was preserving 1R. CVS, no trade. Disney tried the collapsing dragon, but scratched. There was no collapse to the collapsing dragon. Dish, there was a micro gain on this one, so it was a gap up and go. I bought the continuation of it. This ran all the way up to here and rolled over and took the exit here. So we kept one, and ended up giving back 2. So that felt a little something. I thought about this one, but that felt like a revenge trade. So I didn't take it, and then it followed through a little bit. But we'll take the 1R. Devon, no trade. I thought about this. There was some regret from not taking that, but we'll see. That really was not a runaway move, and it really just looked like a reversion to the Bollinger Band mean because it closed pretty close to that. Electronic Arts, 1R on a collapsing dragon. Emerging markets, no trade. Ethereum. This was a nice one. I'm going to hold this one overnight. This was the biggest gap of anything in our stack. It continued to work, so we'll see that on the 3-minute. It looked like this, and when that gave like a little hook, that's what this entry was. And then this is a 2R battle drill. It rolled all the way up into here. I probably should have gotten out of that here. But I was mindful of the Bollinger Band mean. Gave it a little room to run. And then at the end of the day, it closed here. So this was a crapshoot. In retrospect, the routine play would have been here. But there was really not much else happening all day. So I was monitoring that one like a hawk. That would be a reasonable exit. But we're holding this one with 2 positions overnight. Mexico, no trade. I missed this move. Brazil. Brazil, no trade. Intel, just continuing to monitor, and this stuck its head up to see what tomorrow will look like. We're still holding about 5R on that one, and today there was no threat to it, so let it run. IP, no trade. Real estate, we closed the COTA 2 for about an R. I thought about this re-entry on a 1, 2, 3. This exit, I wanted to mark off the feeling of regret that I had on this one, and the first part of that was that I felt with this exit, and then it sold off immediately to here. This is how smug I felt. I felt, yeah, this exit really helped me, and then it was a 1, 2, 3 entry, and then I didn't get that, and now I see it closed back here. So the amount of smug that I felt here is the amount of regret that I'm feeling here that I didn't re-enter here and that I got out there. So I'm just going to let that go and just say, look, if it breaks out above 92, I'll just enter in the usual way, but I got no overnight risk. So it was interesting to see how the smugness was balanced by the regret. I think this feeling of smug, that was the equal and opposite reaction. So I put that yellow dot to remind me to acknowledge that. Coke, no trade. Commercial real estate. Regional banking, I should say. No trade. Mattel, tried the collapsing dragon short. There was some smugness involved here too, as it ran all the way down to here and then droned on to the edge of the dragon after this, and then I got a bad fill, so basically a scratch. I let all of this, that was about a +1, and I let that fritter away. I got lulled into complacency with that little doji. I thought because it couldn't get through the river, it was going to fail, but then it did. So, scratch. McDonald on a really quiet day ends up getting a lot of self talk. This was a fraction. There was some regret. I felt like re-entering here. I didn't. It That's how much regret I felt. Merck. I mean, I consoled myself with the thought of holding ETHE, so we'll see if that pays off tomorrow. No trade in Merck. Microsoft. Merck, no trade. Microsoft, no trade. Marijuana, no trade. Nvidia, no trade. Clean energy, no trade. It was really a grinding day, and you see that in the S&P. So after oscillations, this is really a nothing. I'm hopeful for tomorrow because the river is kind of making a little Kata 2 action here. So all it takes will be a little bit of little energy to go, and it closed near the top of the range. So tomorrow, this was about as sideways quiet for 2 days as you could get in the quiet holiday period. So that could be a sneaky breakout tomorrow. So I'm going to be ready for that. By the same token, this could just drone on back to 474. So not much overnight positioning for me except for ETHE. Treasuries, on the other hand, did give a little gap up and go, and I don't like holding them overnight, so we captured the 1R. Tesla, no trade. Walmart, micro 1R gain in the usual way. And then this was, can't even see it because of the size of that gap, but when you zoom in, this was yesterday's regret. I thought about entering there yesterday and didn't, and then missed this move. So today, when it broke up, I decided to speculate in, and it closed pretty well, so we're holding an R, and that's about the only other one that I'm holding overnight. All right, let's go to sniper trade. Yeah, so this one was ETHE. It was a nice swing, and that was supported by the 3-minute. This was that gap up, the OR3. Next bar moved out, so we bought it with the standard risk. And it just moved through 2R, through 4R. Couldn't quite make it to 6. And then when the PSAR flipped, just took a relaxed exit for 1, 2, 3, 4, 5R. That's a 5R trade. And then this little re-entry was looking for that, never got it. When this started to fail and that went into winter, I wanted to protect against the move down to the VWAP, so we just exited here for half an hour loss, and then just stayed out of it. I'm encouraged by this one tomorrow. So I used the 5R to pay for the 2 swing positions that I'm holding overnight. So that has a smaller position size because it's a swing position, but so the intraday position is larger than the swing position. Where is our... Yeah, there we go. All right, so this is a WMB3. So this is on 3-minute. This is a WMB3 series. So this blue bar here is the opening. It start because of the gap down, because it closed here and then opened down here and then sold off. It immediately goes oversold. So then we come up to the MACD, and this is the first uptick we have. So when this closes, we get the uptick. We then ride that up. Then this box is that bar. That bar, when it closed, is what created the uptick. So we put a entry when it breaks out of that one. Next bar broke out, so we take that. I come down and put a stop right here. That is about 4 cents for execution. So that's your execution risk. It's 4 cents. That's how tight that thing is. It moves out nicely. This felt really good when that R10 held at the Bollinger Band mean and then took off. That's good. That feels like it caught a 2. And then you get this one big bar of expansion that closed really well. When that happens, that pulls price out. This is where you get the third dot of the VWAP. So you get, 1, 2, 3. So on the fourth one, I got my stop in here until I get 3 dots, and then on the fourth one, I move that stop to here, and then I pick up the PSAR until it exits here. Now, the only change to that I might make is that when you got this little chop, that's the same size as this one. So when you get a big bar breakout, notice that that whole thing is the same size as this, is the same size as that. So this is a consolidation, and then it gets another run up, which is also that same size. And then when it fails out of there, it hits the PSAR, and you get 1, 2, 3, 3.5 R execution R on that one. The point I want to make on this one is that if you see that kind of bar, you would not be wrong. I would not flog you if you decided, you know what, I'm going to take half that bar until such time as the PSAR dot picks up. So the path of that exit might have looked like manage and then make a sniper decision to move to here to lock in half, and then just keep that in play until the regular Wu-Wei exit triggers to here and then picks up the PSAR and then pick up the PSAR. So that's what that, if you were going to use any kind of discretion, that would be overriding the Wu-Wei, because you want to lock in the gains. You say to yourself, look, this is an abnormally good bar, so let me just lock that in by taking half. Instead of letting that come back, because right now, when that bar closes here, you're only 2 dots out. Your stop, according to the Wu-Wei exit, is here. So technically, if you were going to follow the Wu-Wei exit mechanically, you could very easily have taken that and said, oh, there's my -1 executioner. So I don't like doing that. When I see that kind of a big bar, I know what it's like to be hungry. I don't mind using some executive. Hey, maybe you just go to the PSAR and lock in a no-lose plus dinner for 2. Maybe you go just under that bar. Maybe you take half. Any one of those 3, 1, 2, or 3, takes away your risk. Is there anything wrong with that? No. And I would note that if you took 1, you're still on the safe side of the Bollinger Band mean, so you've snuck that up into position, if I can say it that way. But there was not even a threat of it, never even hinted at breaking out of that. And then you get another run up, and at that point your stop is here, and you might have said, you know what, I'm going to lock in the low of that bar, and then you end up getting out here, and that's the same exit you get over there. So this is where you get paid, is when you've got a winning trade and you're looking to adjudicate your trade-off decisions. That's what trading looks like to me. You're spending the effort to decide how much money you're going to keep. Now this is the next WMB3. So this is about an hour later, and this is still in EWZ. The next time that thing sells off, that gets to oversold, and then you check here, there's your first uptick, actually here. But this does not break out of that bar. So here's another uptick. So now you set the breakout above this bar, and there's your breakout. You might have used that same 4-cent risk, or you might have used the swing low, which is about a 7-cent risk. Your call. There's no difference in the position size just because my execution risk was 0.04 versus 0. My position sizing risk was against a much larger risk box. So this is just telling me what fraction of that am I going to lose. So I'm not using the difference between 0.7 and 0.4 to increase my position size. I'm just using the standard position size. I'm just not going to take a very large loss. So here's where our 1, 2, 3, move your stop up to here, and then it ends up hitting that right away. So you capture a fraction. At one point we were, one execution risk to the good. Here's where that rolled over. You might have taken that, but that's, you're nickel and diming yourself. I gave it a little more room. When it doesn't fail any further, you might have been tempted with a COTA 2, in which case you probably would have gotten out here. And then when it crosses back below the Bollinger Band mean, I took this trade. There's my risk box. Thought hard about this as a second position with collapsing dragon, but because this was such a small risk, I just kept it like it was, and that one gave back 1, 2, 3, 4 execution risk on the other direction. So the first trade that we looked at gained 3.5 to the upside, and then this one gained 4 to the downside. In the grand scheme of things, this was just a sideways move in EWZ, which got the trade in both directions for 3R and then 4R on the size of that. But you have to have a pretty narrowly defined risk box to get that. And that's driven by the size of the PSAR foot. A grind for Ilker and Disney on the short side here. That's about all there was available today. It got merked out of Merck quick twice. This is on, 30-minute bar. And mostly a sideways channel and even Alcoa, he gets a grinding 0.6 on. Micro loss in the Oracle Yeah, that's about all there was. Gets a nice win here in Tesla. And basically scratches out with maybe a micro loss here in AI. Wasn't much available. George gets a couple of nice ones early for 1R, and was traveling for the holidays, and that would have been a natural play for him. Over to the report. This is real. You can see that those lower lows are pushing this thing in a very small range today, and that's the all-time high right there. Not much, and if it breaks north of that, look out above. I mean, there's a January effect coming, and you just wonder, is this going to be the excess gains in large caps, which then get leveled off to go promote small caps, which underperform for the year? Be ready for small caps in the first week of January, or real estate. Yeah, again, you can see how these holiday rising lows, and this sort of has a lid on it at 476, and if that breaks out, there's your all-time high. Again, you can notice how just how narrow the range of the last 2 days has been. So it's quiet in the woods. Bullish normal, wildly overbought, favorable volatility, ready to break in either direction. Don't try to overtrade this. There's Intel, 3M, Tesla were the breakouts today, and Walmart was a nice recovery. Walmart still feels good to me. There was some grinding upwards in diamonds, Euro Asia, Russell Small Cap is making a stealth move. I think that's a front run on. Let me just show you, just with a cheap and easy tool with finance, Yahoo at finance. I just want to show you something. Relative strength, how that, this is a poor man's relative strength. So if I go to full screen, try it later. And this is the S&P 500 for 1 year performance, right? And if I just do a comparison on IWM, what I get is a percent comparison. So this is the S&P's performance for the year, 21.7%, and the small caps 8.9%. So there's a large cap premium of about 12.5%. And it's been outperforming all the way. But if you look at the last month, the steepness of that curve is better than the steepness of that curve. So in the last 30 days, the small caps are doing better. Now, how can I know that? Well, I can go to the 1 month chart, and now what I can see is that the small caps are up 14% in the last month, and the large caps are up 6%. Oh, so that means that for the longest part, the S&P has been better than the small caps, but in the last month, these little guys have accelerated compared to the S&P. Well, why is that the case? Well, if you think about, from January to January, what happens in January? Portfolio rebalancing. How do passive asset allocators, how do they do that? Well, dollar cost averaging. So they start the year, let's suppose they started the year with just two positions, the S&P and the Russell small caps. So they start off with equal dollar weighting in that. And then at the end of the year, the S&P is up 22% and the Russell was up 9%, I think it was. So the average was, let's see, 15%. So this is the excess gain in the S&P, and this is the underperformance in the Russell. So in order to rebalance in new January, you got to sell off some S&P, you got to sell that, and then you got to buy some IWM. So that means in January, all the things that were underperforming in a portfolio, if you had an average portfolio that looked like this, and these were all the ones that had excess, you're going to cut that all off, and you're going to use that to buy up all of these other underperformers, and you're going to get a lot of those shares because the share price is low. And then that's how you get dollar cost averaging. So when that happens in January, all of the buying pressure is going to be on the ones that underperformed the year. So if you know that that money can't even be spent until the January paychecks on the 1st and the 15th come in. Plus any selling that occurred here to raise cash to buy in January. What are they going to buy? If they're going to buy the IWM here, you maybe could look at IWM right now and say, hey, through November, IWM was underperforming the S&P. So why don't I just sell that a little bit early and start buying this now at these depressed prices so that when the real buying pressure comes in, I will have had a better... Anyway, that's front running. Now, what else? If you take that to its logical extreme, if then you say there's monthly rebalancing, and guys are getting paid on the 1st and the 15th of every month, that's why in our studies it shows if you buy the weak position 2 days early and then sell it 2 days after the 1st, there's actually a little bump that you get from the guys that are buying on the 1st and the 15th. And so that happens every 12 months. So that little tweak is just noise to people that balance in January and rebalance again in the next January. But the January effect combines the end of year sell-off and rebalancing plus the January purchase, and that's why those first 2 weeks of January can be distorted compared to what happens in the second half of January plus in February. So that first, 2, or 0 to 5 weeks or 6 weeks of the year is really a lot of volatility, and then it settles down until about May. And so that's where you would expect to see some momentum. If there's any momentum that comes out of here, you'd see it persist. So I'll be interested in seeing what IWM does and what IYR as the real estate, which underperformed. If the S&P takes a haircut and that money goes into the Russell and the IW, I'll be especially watching for those for discretionary tactical trades. So I just wanted to show you a quick strategy that's based on calendar date rebalancing, and how that logic chain goes. All right. Let's see. I think we covered all the. Yeah, because George got his covered. Now we're back to the. Back to the daily report. There's a few symbols that are in still testing out well. I'd stay with the momentum players and not look to take overnight risk. There's a bunch of squeezes today. The squeezes that are attractive to me is Microsoft, the Qs in the S&P, the Russell and real estate, and even McDonald's. All of those are easy breakouts to play for short-term pops tomorrow, but that's a real tactical trade. So I don't want to overthink that. Summer's looking good. Marijuana, Tesla, Nvidia, and I like Intel, sure do. Intel, Microsoft, Walmart, and Brazil for me tomorrow. All right, that's everything we got for today. We'll get this published and posted, and see you tomorrow. I believe I'm going to start a hypnosis training with these guys in Canada. I want to add that to my coaching. So we're going to give that a try. Since I'm going to do some hypnotic coaching with Sonal, I want to also work on the delivery side of that too. So I think I'm going to start that in January. And we got the reading club coming up in January as well. All right, fellas, take good care, and we shall see you tomorrow.